Welcome to Caching Waves. This is an Elliott wave update for Bitcoin. Now, just fair warning, this is my only video for the day. I'm heading out in about an hour and I'll be gone overnight. Won't be back till tomorrow night. Hoping to get some videos up by then. But I'm going to be discussing the bullish scenario as well as a bearish scenario that you really have to be paying attention to the next day until I come back to post the update. So if the bearish scenario plays out in Bitcoin, that applies to all our bearish scenarios on all the altcoins as well. Right? What we talked about on XRP, if you haven't seen that, the alternate, as well as ICP, all the alternates are having very similar patterns as Bitcoin is right now. So we'll go with the bullish scenario right now. And that is from our low, we have a wave 1, 2, 3, 4th potentially finished, looking for a 5th wave of the 1-to-1 extension of wave 1 off of wave 4. That takes us up to about 98,000 if this low in the 4th wave holds. We did come between the 236 and the 382 of the wave 3 retracement, which is the ideal area for our wave 4. We did not hit the 1-to-1 in time quite yet, where wave 4 will equal wave 2. That is in red, you can see right there. We're a couple days short. Usually wave 4 takes longer than wave 2. That's why that's a concern. Okay, so we'll talk about the alternative that the wave 4 isn't complete, and the alternative that we're actually potentially transitioning into a bear market altogether. So, okay. Let's go to the 4-hour. Okay. So the biggest issue in this entire correction to me is this wave right here. I can count it as a 3 or a 5. It tends to happen when we get these capitulation events with a lot of stop runs. You get a lot of ugly looking waves. So it's very hard to differentiate between a 3 and a 5 wave in this area. Now, if we are complete, I have this as a double zigzag, W, X, Y, as a double zigzag. Now, if this is a 5 wave, this can also be an A wave, our B wave, and we get 5 down here for our Y wave. That's the issue we have here. And then we have our WXY. So it's either a very short Y wave, or we will likely get an equal in time correction for our Y wave. That's the issue. So since this can be a 3 or 5, we can be complete here, or we can get 5 more down, right, for our C wave in the second ABC. That's why this area is difficult. Okay, let's talk about the bearish scenario. Since this is a 5 wave move down, also have this as a potential diagonal for a wave 1. Wave 2, 5 waves down for a wave 1. Our wave 2 currently has 3 waves. And then we look for our 3rd wave down, 4th, 5th, etc. And we go down in a 5 wave move, and the entire structure is a flat pattern as an A, B, C. Remember, we've counted this. This is only 3 waves currently, and there's a lot of 1-to-1 extensions here as a WXY. So that's why this area is very important. We'll see if we hold or if we drop, but I want to be ready for that bearish scenario, just in case it does play out. So we'll talk about this area here. You can notice the area that's going to be difficult is at the 1-to-1. If this ends up being an ABC, say we come to the 1-to-1. Because remember, in this area, this can also be a Y wave, and this becomes our ABC. So this area is going to be interesting. If we do happen to make this move, it's going to be hard to know whether it's a 3rd wave or the wave Y. We'll have to pay attention to the reaction at that 1-to-1, see what pattern forms, just to give us some extra edge and probabilities on our side. So down on the micro, this is how I currently have it labeled as 5 waves. You can see it's not pretty. It's really not. But it does count. It is not invalidating any rules. And the retracements aren't ideal either. Our 3rd wave came between the 1.618 and the 2.618, and obviously our 1-to-1 is longer than our wave 5 is longer than our wave 1. So it does count, but it's ugly, right? It looks more 3-wave-ish than 5-wave-ish, but obviously you can count a 5-wave in there, so it's valid. Okay, so knowing that, this is where I get a little bit concerned, is our extensions here. So I actually think this plays better with the correction that we got, and we end up making a flat here, ABC. This looks like a 5-wave move, and we do have a diagonal fitting pretty nicely here. So I have adjusted that slightly, and what that opens us up to is on linear, with this count, we have hit a 1-to-1 extension. Now, one thing to note is when we hit a 1-to-1 extension, this is why in previous videos, when I suggest we have a 1-2-1-2 suggestion, I like to hit shy of the 1-to-1. And the reason being is when we hit the 1-to-1 extension, it's way more likely to be a C wave in a zigzag than a 1-2-1-2. Because second 1-2s are usually smaller than the first 1-2, right? Because we're of a smaller degree. So this is my concern. The best case scenario I see here is, since this is a 1-to-1 extension, even this wave is ugly looking. It does look like 3 waves, but you can count 5. Again, very ugly area. But the more uglier it gets, the more likely it is corrective. That's another good guideline to follow. So if this does happen to be a 1-2-1-2, which it easily can be, invalidation level of that is obviously right here at the wave 1 low, but we want to hit the ideal areas between the 382 and the 786, ideally holding the 618, right? So I'd be very concerned if we start dropping here below the 618. So kind of this zone here. And if this is a short wave 3, because it is longer than wave 1, if this is a short wave 3, then obviously your invalidation is the top of that wave 1. So I wouldn't be holding this too long. Probably the lowest I want to hold it is about 57K. Obviously not holding anything past this area where this would invalidate the 1-2. But it is concerning, right? It's just not ideal. We really wanted to just keep pushing with small retracements up to the 618 for our high probability third wave, right? We wanted our fourth and our fifth. So we have to adjust when we see the pattern changing. Usually if this is a 1-2-1-2, we want that correction to be a little shorter than the first 1-2 because it's one lesser degree. So this is my concern. And my bearish scenario, again, we've hit that 1-to-1, is that this is an ABC or WXY. And in that scenario, remember, we counted 5 waves down. We are currently at the golden zone retracement of this potential 5-wave move to the downside. And we have a 3-wave pattern to the 1-to-1 extension. That's a lot of evidence that there's a move coming potentially to the downside. Now, I'm not going to be biased in this area. Remember, if we do break, potentially 1-2-1-2, very bullish. But if we continue to drag down like this, which looks like sort of a diagonal pattern, and we come up, there's a chance we just absolutely collapse, right? For that third wave. Now, alternatively, what would probably mess up the market a bit, I always just think of these when you see a 3-wave move. Think that, yes, it can be an ABC correct to the downside. So we have ABC, potentially. We have 1-2-1-2. ABC mimics a 1-2-1-2. But again, I don't like that we came to the 1-to-1, although it doesn't invalidate anything. It's just probabilities. So we have an ABC, a 1-2-1-2, or a W. ABC is a W wave. This could also come down, find a nice fib level on this entire 3-wave move, make another 3-wave move up to the 786, between the 618 and the 786, and then we get our third wave. So you can see how difficult this navigation area is. Now in these three scenarios, what is the important level? Well, for the 1-2, it's obvious. You want to hold above the 786. It's about 56,300. To invalidate the 1-2, the way I had it labeled is this level right here. Or sorry, the 1, 2, 3, 4 is that level right there. So kind of anything below this zone is starting to get quite bearish, right? So, and just to show you how tops can sort of form, right? How they can start going to the downside, because it does look corrective. You get a fast drop similar to that, fast drop similar to that. A lot of overlap chop, I know these aren't technical terms, but just pay attention to shape. That's why I always pay so close attention to shape. Get a nice sideways consolidation, a little sideways consolidation, and drop, right? So I'm not sure what the current count is on this. A lot of overlap. We could have a 1, 2, 1, 2. This is just the bearish scenario. I am not biased one way or the other. This could be our second 1, 2. We could be making a flat. That could be a diagonal. We won't know till the reaction after, right? If we start dropping. So I would be very wary very soon. Pay attention to a fast drop if it comes. So those are the scenarios I'm looking for. Very important levels to hold. Obviously this one, we want to hold to the highest probability zones, which is above the 618 at 57,666. We prefer not to overlap with our wave 1 high, labeled as such. So if we start coming down here, I wish I had a clearer pattern, because this is where it makes it a little bit difficult. Because if we have a clear 1, 2, 1, 2, we can take a short on the ABC. So for example, if this was a 1 and we're confident this is a 1, so 1, 2, 1, 2-ish, we could play the break of the B. This is usually the way I play it when I'm unsure. So this would be a third 1, 2 in that scenario, right? And we'd be playing the A, B, C. So if this is another 1, 2, this is an example. I'm not saying this is happening. I'd play the break of the B wave. I'd trigger in short as soon as the market came to me, and my stop would go on that C wave high. That's how I would play that. And that would be my entry for the bear market to the downside. So that's one way to do it. It's hard when you don't have a clear count. See, in this scenario over here, same idea. Right? If you had this as a wave 1 as a diagonal, this could also all be a wave 1 as a diagonal. We'd play this as our WXY. You can put your channel on, right? If you have that as labeled as a 1, 2. Let me zoom in so I can show you. If you have that as a 1, 2, and this is your WXY, right here actually. The way I would do it is play the break of that X wave. Stop goes at the Y wave high. And that's your trade setup, right? You wait for the market to trigger you in because you're unclear of the direction. We can be bearish, we can be bullish. So your entry would have been like this. You would have targeted the 1.618 extension for your wave 3. Which would have been down here. You can see it would have been a very nice trade. So I get questions all the time. How much do you make per month trading, etc.? Every month is different, right? If you can catch a third wave on a 4-hour trend, that makes your whole year. If you're stuck in consolidation like Bitcoin has been, you're more targeting 1-to-1s, 3-to-1 trade risk rewards more than like 10-to-1 plus, right? So it really depends on market conditions. But what I would do here, personally, I'm keeping my long going. Excuse me. My stop will go at the 786 right here because I'm playing this as a 1-2-1-2, and that's kind of the last ditch effort. But I am up quite a bit on Bitcoin here. So I'm tempted just to hedge since I'm going away, which is likely what I will do, and put my stop for my hedge above this level up here, and just let my long run. So I'll be hedged here. All that means is I'll be the same amount short as long, and I'll let the trigger take me out and just leave me long above this high. Because this does look like it could be a diagonal to the downside. It could be a 1-2-1-2. What I want to see is a little bit more sideways here so we can at least get a channel, figure out where the X or the B wave is, and if you are looking to take that bear market potential, you'd go at the break of the B or the X wave, stop at the high. That's how I would trade it to get the most position size possible. But quick recap, I know it sounds very confusing, but keep it simple. We potentially have a 5-wave move down. We're potentially complete at a 1-to-1 extension as an ABC. That's our bearish scenario. So we just make new lows from here. Bullish scenario, 1-2, 1-2 most likely, or 1-2 very short third wave that is still longer than wave 1, and be looking for a 5th wave to the upside, right? And if we do extend the correction out, we should be coming down as well, come up something like this. What I would do, once again, it's the last time I'll say this, I prefer to over-explain than under-explain, is keep a very close eye on this. If we start dropping aggressively below this area of support, you might consider taking a short. Your decision to make, but you are aware of that bearish scenario. And if you can get a clean 5-wave count out of this, when that happens, like obviously we need a little more waves to come out, but say we channel here for the rest of the day, and you start seeing a very impulsive move, perhaps you take the short here, stop at this high. That's just one example, right? But if you do that and you make a 3rd wave, right, come to the 618, which is also a potential 1-2-1-2. This is how all the patterns work together. You know, in the bearish scenario, this should just continue to the downside, right? Because in the bearish scenario, this is a 1-2. Let me change the color of that so you can kind of see how these roll together. So say this ends up being a 1-2. You sell the breakout below this level here. Or if you can actually count a 5-wave and a nice ABC, you sell the break below. Well, then this is a 1-2. In that bearish scenario, we should not come back and overlap that, right? That breaks the rules of the count, right? If we're in a 3rd wave, we can't come back and violate wave 2 territory, right? The low of wave 2. So in that scenario, your stop can go right there. As this is playing out, you can raise your stops past the 618 as you go and let that run. But if this ends up being a 1-2-1-2, well, then this would just be an ABC, right? 5-3-5. And in that scenario, I wouldn't necessarily buy here. I'd still be hedged short. I'd still be in a short, but I'd probably be at like break even, a stop loss in this area, so I can't lose money at this point if we come all the way down here. And what I would do in the long, if we start impulsing to the upside, is I would buy the breakout above this B wave as labeled. Stop goes at this wave too high. So you can see based on how the structure changes, you can flip the other way. Either we continue on in that bear market and your short is correct, or we reverse back. It's obviously no longer a 1-2-1-2 to the downside, more likely an ABC, and this is a 1-2-1-2. Buy here, stop at this low. So that's how you can kind of navigate between the ABC and the 1212. But yeah, I hope that was helpful. I might have gotten way overcomplicating here. I'm just trying to give you as much information as I can as I am going away for the next 30 hours or so. I'll be gone. So yeah, quick recap. 1212 or A, B, C, or 1, 2, 3. Manage your risk on all the other assets you're in. If this plays out in Bitcoin like this, in the bearish scenario, it's going to take everything with it, right? So go with the alternate bearish counts on all those I gave you. If Bitcoin does not hold, I would suggest watching Bitcoin over everything else. As you can see, we have a 1-to-1 extension right now, right into a golden zone of the retracement right here. A little bit scary. All right, guys, I hope that was helpful. If you have any questions, let me know, but I will be gone for the next 30 hours. And that's it for this one. Thanks for watching.